Hello, everyone. Thanks for joining me today. I'm Haydon from Good Green Money. We're an ethical IFA firm. If you've seen some of these videos before, you'll see that I've spoken to lots of interesting people. I've got another great person I'm talking to today, David Katimbo-Mugwanya. He's head of fixed interest at EdenTree. Just to warn you, I do have a stinky cold, like we all do this winter. So if I start coughing and spluttering, I apologize in advance. I'll try not to do that. But anyway, there we go. Anyway, David, how are you doing today?
I am very well, thank you, Haydon. I hope you are well and recovering from that cold I just heard.
Yeah, well, I'm coping. Let's not worry about that. Let's move on. Okay, well, I'll get chatting to David in a minute. But before I do, just a little explanation of what we're doing today. So anyone who's not familiar with Good Green Money, we're ethical IFAs. So people come to us. We give them complete financial advice, and part of that, we identify some top-rate investments to invest them in, which have got strong ethical merit. David works for EdenTree. Now, EdenTree came about in the late 1980s. They used to be called Ecclesiastical. They renamed themselves EdenTree in 2015. They're one of the stalwarts of ethical investing. They've been doing this from the off. They really know what they're doing. They've got a fantastic investment process in place. So they ask all the right questions. They've got an internal responsible investment team that sits independently to the investment management teams, but they work hand in hand to make sure they get some excellent investment solutions. And they've also got an external responsible investment team that's there to give a bit of governance, ask all the awkward questions. So as an IFA firm looking for decent investment solutions for clients, these are all the perfect things that we like to see. They call themselves Responsible and Sustainable Investment Manager. And as I say, they've honed and perfected their investment process. They've grown in time. They've got a big range of funds. But as I've said, today we're going to concentrate on fixed interest, because David is the head of fixed interest there. Now, before we move on to David, quick investment class for anyone that's new to perhaps financial advice. If you've had a financial advisor before, you've got one at the moment, you'll be very familiar with this. But when you build a portfolio, you put it in lots of different places. You call them asset classes. The main one being equities. So equities are direct shares in companies, and you have funds that are made up just of equity solutions. Now, the next biggest pot is usually fixed interest. Now, what this is, when you have a business that wants to grow, they issue share capital, you can invest in that company. Sometimes they don't want to issue any more shares. They still need to bring in some money. So what they do is they raise some debt, and they put a request out there for anyone who wants to lend them money. Typically, that's done through a bond. You call it a corporate bond. You raise it for so much money, you can buy into that bond. And you have specialists like David and his team buying into those bonds. The reason we refer to fixed interest is that you get these investment vehicles, so you can buy that debt. There are set fixed interest rates that are associated with that, and they can be for a certain time. We're going to drill down into this a little bit more in a moment. And the reason why you add this to a portfolio is that they do perform differently to equity solutions. So a typical example is when interest rates move up or down, it can affect the performance of stocks. They can go up and down. More often than not, fixed interest investments perform differently. So when one goes up, the other might go down a bit, and then a wise idea to have a slice of fixed interest within your investment portfolio. Goodness me, I sound like a investment teacher or something like that. But so I've been rattling on a bit there, but I'll shut up now, David. I'll hand over to you. So firstly, have I got my facts about right? I don't know if there's anything you want to add before we dive into what you do a bit more.
No, I think you've got them quite spot on, Haydon. And in terms of what we do, as you mentioned, there's a range of solutions in terms of maturity, in terms of the credit quality, and the objectives also that we can seek to achieve as responsible investors. So I think that just about summarizes it. So I think it's probably next step to go into the sort of different solutions that we can avail at your time, of course.
Thank you, David. I will. I'm on a roll now, so I'm going to do a little bit more of investment teaching here. There, David spoke about credit ratings. So just to give you a quick masterclass on what that means, that if you get institutions such as a government, they're very, very secure. Their credit is excellent because they're going to pay you back. Therefore, the interest they pay is a little bit lower than something that is a little bit more risque. The chance that something might go bust or whatever, in order to attract people to invest, they'll pay a better interest rate, but then they have a lower risk rating. So when you see credit ratings, people like David are very expert in choosing how far down that credit rating spectrum they go when they invest. Right, okay, let's get going. I've said you're the head of fixed interest. We're going to today concentrate in particular on two funds. One of them is the EdenTree Responsible and Sustainable Short-Dated Bond Fund, and the second is the EdenTree Global Impact Bond Fund. Let's start with the short-dated fund. Now, I know this is your baby. It's been going since 2017, and you're the man that's been there all the way from inception. It's done very well. It's grown to be worth over £450 million in value there. Tell me a bit more about it. What are its characteristics? What sort of investments do you hold? And I know you can kind of probably guess, but just tell me, short-dated, what's that all about? Tell me about this fund a bit more.
Yes, Haydon. I've definitely played a key role there, but certainly it's a collective effort, and the team would be a little bit surprised if I didn't bring them in on this one. But the short-dated bond fund launched that 5 years ago. You correctly mentioned that. And what we are envisaging then, and indeed which played out especially in 2022, was a rise in interest rates. And so the focus of the fund, if you like, the headline objective, is capital preservation, and capital preservation on a relative basis, but also on an absolute basis, if you like, via the credit quality. You went through the credit rating spectrum there, I think, very neatly. So the very high quality end versus a low quality end, but also in terms of interest rate sensitivity as well. We didn't necessarily want to have a fund that was going to fall much more than the market did when the market eventually fell in terms of its capital value. So the two main things there for the short-dated bond fund is a lower interest rate sensitivity. That means it invests in bonds of maturities of up to 5 years and below. On average, these sit around 2.2 years now. We call that interest rate sensitivity duration. And that has been increasing in recent months, but last year that would have helped us on the relative performance of the fund. And also in terms of credit quality, it's an average rating of AA, if I can mention ratings. AA is one notch lower from AAA, i.e. the highest rating, but over those 5 years has had a rating of at least single A+, which is comparable to your high street bank. And over that time frame, of course, given interest rates have been very low until last year, would have paid you at least more than what you're able to get in your cash bank account as well. So all good things there to sort of put into the objectives. As Haydon mentioned, it's a responsible and sustainable fund. And what that means is we are applying ethical screens that are exclusionary, and we're also commending companies that are good, that are positive in terms of the results of their responsible screen into the universe that we can then invest in. So hopefully that's a good summary of the objective, both responsible and the core capital preservation objectives that we have on the short-dated bond fund after its 5-year anniversary. Certainly grown very well, and is investing even at a higher income than it was, say, 18 months ago when interest rates were at rock bottom. Now, with yields having increased, yields being the return that bond investors obtain, is much higher. And so it's definitely a better outlook from that perspective as well.
Fantastic. I think you're going to nick my job as an investment teacher here. That's really, that's good. So yeah, just to summarize then, it's AAA and above. So very secure investments, capital preservation. So that means it doesn't swing around too much when the markets are going crazy. So it's a good solid bedrock for you to make a good steady income when you might have some more exciting racy investments around the side of your portfolio.
Single A, I must correct you.
Sorry, single A.
Extremely.
Single A up to triple.
Ideal, but yeah, single A.
I was doing so well, but yeah. Thanks for that. And then you've got your ethical overlay as well. So that's yes. Fantastic news. Okay, let's just drill down into this investment a little bit more. Now, I know you've prepared 3 really good example holdings that have got strong ethical merit. So if we could just pick on those 3 and just walk through them for a minute, I think that'll really add some color. So back to you. Tell me about some example holdings within this fund.
Yes, example holdings, and we happily explain these. And starting off with the World Bank, it was a 0.5% bond, 2023. And the reason why we like this bond, we participated in it since its launch in 2020. If a lot of you remember, around that May 2020 time, it was in the heat of the COVID pandemic. And so the World Bank issued a bond that was going to use the proceeds to target programs for COVID relief efforts. We were part of those investors that took part in that bond from its first day, so enabling us to fund some of those efforts around the world in various health programs. The World Bank is a AAA rated entity. So again, back to that credit quality discussion we're having. It's owned by various sovereigns around the world. So very high quality in terms of the credit quality underlying, but also very strong purpose therein. Of course, interest rates were much lower back then. And so the coupon, if you like, the interest that we received wasn't so much the sort of maximum amount you could achieve, but the objective of having that, COVID relief effort and being part of that to us was very strong as responsible investors. And it also fits with our health and well-being theme that we have in-house. So that bond matures this year, and we've happily held it since its launch as a 3-year bond. The next one I was going to talk about was the IFIM, or International Finance Facility of Immunization. Now, this was issued last year, and it came at a coupon of about 2 3/4, so paying us 2.75 interest annually until 2025. Again, another 3-year bond. IFIM, for those of you who aren't aware of it, is the vehicle via which the Global Vaccine Alliance distributes vaccines to developing countries mostly, but countries around the world. And so there's a lot of vaccination that needs to be funded in these countries against the 6 killer diseases, but also vaccine distribution, for instance, to combat COVID. And IFIM are the vehicle through which Gavi issue bonds. And we also participated in this bond at launch. Now, of course, with yields having increased, that coupon or that interest is actually higher. And so we're able to achieve that for AA rated bond, and primarily fitting within the short dated bond fund universe. Again, another attractive bond that is higher on the credit quality spectrum, but also with a very strong impact, if you like. It's a not labeled bond, so these aren't sort of labeled, and we're going to label bonds in a minute and what that means. But all the existence of IFIM is to provide vaccines around the world. So very strong purpose behind those bonds. The third one, which is a more recent addition to the portfolio because it has seasoned into the fund. Now, I mentioned seasoning. The universe, of course, is 5 years, but if a bond was issued 5 years ago, for instance, and then it becomes a 5-year bond, it can then become part of the short-dated bond fund universe. And this bond is Assura. Assura invest and develop healthcare properties around the UK, mostly counting the NHS as tenants, so general practitioners as tenants around the UK. But there's also a very strong regeneration theme in what they do. So they can take their sites and redevelop them into GP services, and also add other facilities within those properties as well to allow more community-based initiatives to take place as well. So Assura, high quality, single A rated, 5-year yielding a very attractive 5%, fits within the universe of a short-dated bond fund, and also meets the themes of health and well-being, and also some urban regeneration as well. So hopefully those are good examples of what we've been buying more recently and indeed last year, of high-quality securities that are responsible, but are also generating the impact in a sort of environment that is better rewarding investors such as ourselves now.
Thank you, David. I mean, those are absolutely exemplary, spot on examples. The typical good green money client that comes to us, very conscientious people, and see the need to help others in the world. The fact you've got this World Bank, so the World Bank's based in Washington, nations from all over the world, as you can imagine, a part of this, and its modus operandi is to help people in the developing world to live better lives, and so have a bond in place there that they can use to finance their initiatives is great. You did tell me you were going to talk about if in the International Finance Facility for Immunisation, and yes. I've just found a statistic about them that the work they've done, they have prevented the deaths of more than 16 million people. So a fantastic organisation. The fact that you're there supporting them in their vaccine program, again, exactly the type of investment the typical GGM client is looking for, and Assura as well is a great example. So thank you for that. That's really added some colour. Okay, let's move on to a different beast. The EdenTree Global Impact Bond Fund. Now, this is just about a year old. I think it's coming up to its first year anniversary. So I know you're excited about that. And you'll be producing an impact report at some point soon, just demonstrating all the good work that bond has done. But for now, just tell me about the principles behind the Global Impact Bond Fund and what made you introduce that into your portfolio.
Yes, Haydon. So we launched that almost back end of January last year. And as you rightfully point out there, it's coming up to within its 1 year anniversary, actually very much within the next week. Now, the Global Impact Bond Fund invests primarily in instruments that have demonstrable impact, and we'll go into the kinds of bonds that it mostly has in it. We have green bonds, we have social bonds, we have sustainable bonds. Now, what are these? Green bonds are bonds whereby the use of proceeds are directed towards projects that have very viable environmental impact. Social bonds, again, projects whereby there is a tangible sort of segment of the population that you're targeting, or a particular theme that you're targeting within that population. And sustainable bonds is a combination of green, i.e. environmental impact, and social impact as well. But if I go into that social bond maybe just a little bit more, you can be targeting segments of the population, for instance, the youth, or the elderly, or the poor, or the unemployed within the society. And you can also be targeting certain themes as well. So within that, you can have education, you can also have health. So not necessarily the environmental impact, even though the green bond universe is the one that pretty much led the way in 2007. From its launch, has grown to about $1 trillion of issuance year on a yearly basis. Certainly in 2021, maybe a slight dip in 2022. But the social bonds are not far behind in terms of the purpose that they're issued for, but targeting more social causes. But just back to the Global Impact Bond Fund, it has a minimum threshold of 80% in which it puts to work in these sorts of instruments, and so very clear, demonstrable impact. And you did mention there that we are in the process of creating an impact report. So it's a very core characteristic of impact investing, that you're not only showing the intention to generate that positive impact, but you're also reporting on it and tracking it as well. So both of those core ingredients that we see in the market space, and how the market is evolving, and being demanded of as our clients are asking us for impact across the fund range, this was definitely a more sort of, what can I say, direct approach, and one with integrity as well, to demonstrate that impact. And we launched this last year. The reason why we focused on the global universe is because the global universe is much bigger than what we have in sterling. And so, yes, we can and do invest in these green labeled and socially labeled instruments in the sterling and short dated bond funds. But in the global impact bond fund, there is a much broader universe. It is a currency hedged fund, and so we hedge out that currency risk. And so it's still a sterling denominated fund. And so for UK investors worried about sterling risk or currency risk, that is removed, and you get the impact whilst you're doing that, and a global diversification as well. So I know I've gone on a lot about the fund. Hopefully you can sort of gauge the impact that it's generating, but also the global universe and the reporting requirements that are demonstrating some of those positive impacts that we are generating by investing in these.
Yeah, again, fantastic. Yeah, that was a very detailed and useful explanation. The title of our company, Good Green Money, so good about all the social stuff, green about environmental stuff. You've got both bases covered very, very well there. So yeah, just one more explanation. I'm on an investment masterclass here, but currency hedge is where you buy an investment that's in a foreign currency. You've got the risk, the currency switches up and down, and you transfer that back into sterling, back into UK pounds, and you've lost out, you've made some money accidentally. Well, you can put things in place to make sure that doesn't happen, and that's called hedging. So by David's skill and ability for the team there to be able to hedge this stuff, then you don't need to worry about the currency risks that you might have if you were to buy something overseas directly. So that's a useful little addition to know about. Okay, we'll move on to some more examples. Again, you've highlighted 3 examples that you've given me prior warning about. They're all very different. They're all excellent. So back to you. Tell me about these example investments within this fund.
Yes, so the first one I'll talk about today is Asia Development Bank. Now, Asia Development Bank is owned by governments in the region, and it is a AAA rated entity, mostly funding development projects within that area. So at the start of last year, around about the time we launched the Global Impact Bond Fund, actually, they issued a Canadian dollar denominated bond that was a social bond, but not just any other social bond. They were targeting gender issues for women in Southeast Asia. And so women empowerment programs are being funded from the proceeds of this bond that they raised. They're also going to provide SME funding and education programs to women in those particular areas. Now, of course, Southeast Asia being a very underserved, you could say, area in terms of these initiatives. Asia Development Bank being a very high quality entity to lend to enables us to be able to generate these very high impacts via a issuer that is very highly rated. Now, the fact that they even issued in Canadian dollar denominated currency means that, of course, your typical sterling fund wouldn't be able to invest in that particular bond. But of course, because we hedge, as you mentioned, Haydon there, we can invest in that instrument, take out that currency risk, but then also generate that positive impact via these empowerment programs in Southeast Asia. So targeting women, so a gender bond there. The second one that I'll talk about is Severn Trent, probably more local to us here in the UK, but it's a water company. It's actually issued a sustainable bond last year. Now, a sustainable bond, as I mentioned earlier, combines both environmental impacts and social impacts as well. On the environment side, Severn Trent are the best-in-class water company, to put it neatly. They have very good controls when it comes to water pollution, but they've also gone a step further, and they're reducing leakages. They have a target of reducing these by 15% in the next 2 years, and they're also doing various initiatives to mitigate the sort of pollutants that end up in the river system in the UK. I think it's been found that only 14% of the rivers in the UK are virtually viable by standards. And so if you sort of drill that down, you'll find, yes, there's companies that fare better than others, and Severn Trent is higher up there, but there's still more work to be done, for instance, to engage with farmers in catchment area management, which is what some of the proceeds of this bond are doing as well. And on the social side, it's very important to also realize that we're in the midst of a cost of living crisis. Severn Trent are helping people, have been helping people in terms of affordability. They have set aside some of the proceeds of this bond to help with their affordability programs as well. So definitely a strong issuer that we have engaged with, over the past year. We've engaged a number of water companies, and very strong sustainability story with impact to boot as well. The third example I have is Pearson. Pearson are an education provider, and with the proceeds of their social bond, which targets the specific area of education, they're looking to further scholastic materials and education materials to countries around the world, particularly in the developing world as well. But even in this particular bond, from your standard high quality issuer, there are programs that you can sort of target that are not necessarily as easy to achieve via the regular bonds. But with these particular bonds, you're almost sure that when you invest in this sort of instrument, those proceeds are being used. They're in fact being ring-fenced for projects that only have those specified criteria. So in this case, going towards education, furthering education, and access to education are the targets that Pearson is seeking to achieve. And those are the examples I had to share with you today, Haydon.
Yeah, again, superb. So yeah, gender equality, water preservation, education, fantastic themes. Again, something we would wholeheartedly support, and welcome the fact you're promoting them, combined also with affordability issues in terms of Severn Trent and the initiatives they're taking. They're obviously a very conscientious business, so that is great to see. And then, yeah, education, focusing developing world again. So fantastic example of great bond there. So we've got some really good understanding what that bond's all about. I think we've covered a lot of ground here today, David. I'm very pleased with the information you've passed on to us so far. But what I am going to do at this point is play a little bit of devil's advocate. I tend to do this as a financial advisor when I speak to a client. I always say these are the good points, these are not so good points, but overall we think it's a good thing to do. I'm going to put you on the spot right now. The talks I've done with other people today have all been about those equity investments that I spoke about earlier. So you can buy direct shares in companies. And one of the benefits of doing is that you have some power, you've got some control over that business, because you can vote one way or another on an issue at an AGM or whatever, and you can influence how that business works. When it comes to fixed interest, as important as it is, you don't have that voting right. So I'm going to throw that back at you. Fixed interest, is it as a good investment from an ethical point of view as equity investments? Is this a problem? Should people be concerned about this? How do you react to that?
I mean, it's a right question that you're asking there, a question that we get fielded a lot. In terms of fixed income investors and the allocation of capital that we provide, we definitely have a role for these companies to play in how they're operating, how they're financing themselves. And so we certainly have the ear of the corporate treasurers that come to us asking for money, for sure. In terms of engagement as well, first of all, as a house, we are asset class agnostic. And so we'll engage with a company, whether it's on the equity side, whether it's on the debt side, when we're owners. And companies these days are much more receptive towards the likes of ourselves, especially those that have been in it for some time, that have material knowledge of these material risks, basically, that those companies are likely to face, and how they can improve from an impact point of view as well. And so from our side, in engaging with these companies and talking to them, they are very receptive, and they are much more willing to change, especially when you sort of tell them that you're really allocating capital as best as you can, and might not end up allocating capital to them or lending to them. But to give you an example, last year we engaged thematically on the water sector. I've mentioned the Severn Trent example, but we did engage with other water utilities. And in some of these, that were formerly public companies that are now private companies because they were taken over by consortia of pension funds and sovereign wealth funds, the fixed income investor or the bondholders are one of the last few standing public investors to engage with these companies. And so if you take a company such as Anglian Water, that's owned by various groups, it is us engaging with them. And for a lot of other water companies, we're the only point of contact that they have basically to express some of these concerns. And they're also very receptive to that and really willing to engage with us more openly to enable them to ameliorate their adverse impacts, if not improve. And so there's a very strong role for us to play, not just in the sort of public, but, where, some of these issuers only have bonds, to engage and to carry on furthering some of these agendas. So yes, we might not have the voting right, but we definitely make our voice heard, and the companies are receptive on their side to make those changes where we're seeking them.
Fantastic. That told me. I love the fact that you said you're asset class agnostic, David. So I think I like that term, and that was a very comprehensive answer. So you've got some clout. I mean, you guys, do get listened to, and no, that was really good. Okay, David, I think we're more or less there for today. So again, thank you for your time. But before I just do a quick wrap up, do you think there's anything else we've covered, or do you think we've more or less covered all the bases?
No, I think we've covered a lot of ground, Haydon. And once again, thank you from us at EdenTree, and particularly the fixed income desk, for your time. And if there's anything we can talk to you about, certainly, or reach out to our website on, we're happy for you to do that.
Will do. Yeah, just on that point, EdenTree over the years have always produced some fantastic literature that you can go on there, and they do reports on specific subjects, and it's really quite detailed, and I've always enjoyed reading them over the years. So yeah, I do commend you guys for that. Okay, we'll wrap up now. So anyone that's watching this, as ever, just to remind you, this is for information only. This is not advice. Do not go ahead and invest based upon what we've seen today, because although, as you can tell, I like what EdenTree do, they might not be right for you. Go along and seek advice from a professional financial advisor, such as somebody at Good Green Money or somebody else. There's plenty of good ethical advisors out there. Final thing to point out, this will be on our YouTube channel. So if you're watching this via our website, do go and subscribe to the YouTube channel, and then you'll be updated when we have future videos. So that's about it from me. Thanks again for your time, David. And I'll see you soon. See you later.
Thank you. Bye.